What's up, guys? It is Sam here, and I wanted to talk about my weekly numbers for options trading. Completely transparent. Before I do that, make sure you press that red button that says subscribe. I don't know what I'm doing here, but maybe just touching the red button. And there's a little bell. That's the notification bell for YouTube. Just gently smash that. I'm waiting. Okay, so now, with that being said, let's get into options trading. I got fucking slaughtered this week. It's all good though. So started the week with, so I'll just tell you what the results are, and then I'm going to get into some reasons why that happened. Also the positions that I had this week, or this past week, right? So today is 4/28/2019. The week ended on Friday. So I wanted to talk about some the total and then get into some of the details. All right. So I lost $5,300 one week. $5,340 in 1 week. I'm still up for the month, but and you might think the portfolio value is pretty tremendous, right? If you have a $5,000 loss and you're still up for the month. However, portfolio value is like, so I'll tell you exactly what it is. $58.49 is 73 cents. And actually, I can pull it up and show you. Let's take a look here. Here we go, and I'll just refresh this page. You can see it's refreshing. And it is right there. Completely fucking slaughtered. That was Friday. $2,700 loss on Friday. Just check that out. That's just whoosh, nice straight line down. Not what you want to see. Okay, so portfolio is not that big, and I'm still up 800 and change dollars for the month. So still up, still awesome. I mean, I'll be happy if I'm up $500 or $1,000 for the month. But either way, I just want to continue making progress. So I started the week with $11,150.13. That was the beginning value on at the ending value on Friday, the previous Friday, and then I fucking lost a shitload of money this week, and that's more than a lot of people make in a year, in a month, and I just lost that in a week. So just to put things into perspective, like the average household income in the United States is around $60,000. I think 61 or something in 2017 or something like that. So that's how much I just lost in the week. Just to put this thing into fucking perspective. And I'm not trying to downplay it. It is fucking substantial. However, when you trade, you know that these things are inevitable. So it's not fun, but you just know that's just part of the game, and shit happens, and you just keep moving forwards, right? Okay, so 3 things that I had open this week. So most of what I'll do is, like 99.9% of what I'm doing is spreads, and that's above and below the market. So a lot of times they'll turn into an iron condor. An iron condor is let me grab a marker and I'll show you guys. An iron condor is something that goes where you're above and below the market. So you have, this is going to be a payoff diagram where it would be something like this. Right? So generally speaking, that's what I'm going to be talking about. However, I'll get into this and this in separate pieces. So together, they would look like this, but this is 1 and this is 2, or vice versa. I'll open them separately. And they might not, the stock price might not, a lot of times, so S0, that would be kind of like the starting point. And that just means the stock at 0.0, or like in time. The subscript is actually, this is supposed to be time here. Time. So it's not always centered. Sometimes I will get in, you know what I mean, at different points. of S0, and that's generally going to be what I'm talking about on these. So and the other thing is, this is not always even in terms of the positions that I have open. I might be more heavy on the put side or more heavy on the call side. So that leads me into the first, which was Amazon. So I primarily work with 3 stocks currently. A tiny bit with a couple other ones, but not much. SPY, the ETF and the SP 500. Okay, so Amazon. Amazon, and oh, by the way, the $5,300 is primarily, I should have fucking mentioned this, is primarily paper losses. So there's something, so when you're trading, you'll have, with options, you'll have an account balance, and then you'll have a cash balance. And they're not the same thing. The cash balance is how much cash you have. Right? I'm primarily doing spreads, so I'm selling to the market and I receive premium. If you want to know some more details about these things, just go check out the channel and look at options, and I make other videos on that. Try to be very detailed in them, or leave me a comment down below or reach out to me on Instagram. Link is in the description, and I'll be happy to answer your questions. So the cash balance, if you want to get the portfolio value, actually, let me just show you a little fucking diagram, just because I love this magic marker that I have here. It's awesome. Okay, so we've got cash here, then we have PV. Let's do that. Okay, so this is how much cash is in the portfolio. Minus, right? This is a minus X equals PVS. So, or money. So this is the portfolio value, the money in the portfolio. Now, what this is are the options. So if I were to close out all of my positions at current market prices, that would be, where the fuck is, where is that? I'm actually going to pull it up on the account so I can give you accurate data. Do you guys say data or do you say data? Anyways, it's, this right here is $10,822.73. And we can get this number right here, which is the number I just gave you, 58.49, whoops, and 73 cents. Whoops. So the actual portfolio value, just with some very, so now you got to solve for this. And if you remember even just a tiny teensy little bit about algebra, you will bring this over here, or you could just bring this over here. And then divide by 1, but this will be easier. It's just going to take us 2 steps. So we're going to bring this over here, and we're going to bring this over here. So what ends up happening is you have 10,822.73 minus 5849.73 equals X, right? So that's this right here, the cash value, minus the portfolio value, and that'll give us, obviously the difference between those two is 10,822.73 minus 5849.73, 49.73. So that's how much the options are, right? So if I were to close out all my positions right now, Monday morning, and none of the positions changed in value at all, but I wanted to close out my accounts and all my positions, I would have to pay this amount. So that means that these are not necessarily all losses, right? So you can see the cash value, I think I was at like 12 or 13,000 or something like that. So I maybe lost of actual money, about $2,000 probably for the week. The rest was just from the actual portfolio changing in value. So I was able to, well, let me get into some more of the positions. Okay, with that being said, tangent. I should have a sound every time I have a tangent. So on 420, I have some notes here. 425, Amazon had their earnings announcement, and they just fucking blew their numbers out. So I had a iron condor type of position open on it, and I was a little bit heavier on the put side, I think, meaning I have more exposure on that side. But it continued to go up and continued to go up, which had been the trend for like the last month or so. And just fucking destroyed it. One of the things that came out of the earnings announcement, if you weren't paying attention, or if you give a shit, is that they are making about $1 billion investment in Q2 to go further down the road of one-day delivery, meaning, right, most people know that Amazon has standard 2-day delivery for Prime customers on, like, close to 100 million products or something like that. With this investment, and it's going to be playing out through the rest of the year, they want to cut that by 50%. So get down to one day. If you live in certain metros, you probably have already seen Prime Now or other same day issue things with Prime where you can get your products very, very quickly that you order. So, but just having that be the default. So instead of the default being Amazon Prime 2-day, it's going to be Amazon Prime 1-day. So the market loved that. Excuse me, but I think Target already does that with a lot of their products. Not nearly the selection of 100 million. So having 100 million products versus several tens of thousands is completely different scale there. But I don't think that would be too difficult for Target to just keep adding to the inventory. But the market appears to just really love Amazon and think that that's a huge competitive advantage. So anyways, they kept the stock kept going up. So the position I had went against me. It's not losing money per se. If this were Friday and the prices stay the same, this position would be this position would expire worthless, and I would actually make $840. But currently, I'm losing about $60 on this position. Then there's the next, which is Netflix. So half of that, right? If you go back to that notebook that I threw away, where you have the payoff diagram, something like, now I don't know what I did with that marker, but you have the payoff diagram that looks something like this, right? It's down here like this. So with this payoff diagram, this portion made money. This portion is losing money. So this gets closed out at a profit, and then this gets rolled. So I rolled the losing to the following week for a $4 credit. So what that means is my position was going to expire on actually that was with Netflix. The Amazon one, I will have to jump back in there and let you know what's up. With the Amazon one, I rolled for a $40 credit, $39 credit. So let me just show you this so you don't, right here. April 26th, $39. So that's in addition to the credit I've already received. I've already received, the aggregate is $783. So if you look right here, right? Remember how I said I was losing $60 in this position? The value of this position currently is $840. This is how much credit I have received, $783. So the delta on that is how much I'm losing on paper on the Amazon position. But the bottom half of it closed out fine. So now the Netflix, same thing. So this is actually a roll from the previous week. Netflix reported earnings on 4/16, and the prior week and there was a giant fucking sell-off. It was a huge sell-off. I don't know why, because it was the best quarter they've ever had from a subscriber growth standpoint. Netflix added nearly 10 million subscribers. Well, that's fucking insane. Like, Comcast has like maybe 30 million total. So Netflix in one quarter added a third of all the subscribers to Comcast. Like, fucking mind blown, right? And the stock went down. Like, that just didn't make any sense. And so this this one I actually rolled on Monday for a $4 credit, meaning I received money to roll this out. It's still losing money though. In that same example, I'm losing about $150 on this position here. But it was losing a significant more, and it's gone down. So the position is, if I had to close it tomorrow, would be $1,156 I would have to pay, and I've received $1,008. So I would lose about $150, $160. Times 4 contracts, because I have 4 contracts open, so it's $600, so $640 or something like that. Now. Actually, no, it's just $150 total, it looks like. Okay, so then the ones in Tesla. Same thing, iron condors basically, but entered as separate trades. The calls expired profitable. Boop, boop. Thumbs up for the profitability. Thumbs up, press the thumbs up button right now. I had too big, in my opinion, of position in part of this trade. I think I had 4 contracts open. Maybe I had 5 contracts open. I don't remember if it was 4 or 5. Might have been 4. Anyways, I don't remember. And so I rolled one out because I think my belief is that in the long run, the misunderstanding around Tesla, like there's a lot that's going on with Tesla that I don't think the market in the myopic really understands. Myopic is just short term. Myopic nature don't understand the value of. There's a lot of things going on, right? Like you have the electric car company, there's the autonomy piece of it, there's also all the superchargers, the proprietary superchargers that are built up around the world that they're like doubling or nearly doubling year over year for the last several years, or getting close to doubling year over year. There's the energy business, there's the solar business, there's a tremendous amount of opportunity here that is just not being captured in these numbers. So I rolled one position, which I paid for. I don't particularly do that often. However, it was $130, and I rolled it all the way out till August. So that's one of those positions. The other ones, I was able to roll for a $2 spread till this coming Friday. And then this is the only position I opened this week, is another put spread below the market. So that one's profitable right now, but it's only one contract. So the one that's really let's see here. So when you have, 4 of the 5 positions that are all currently negative, that just impacts your portfolio. And once they turn positive, or start to turn positive, which I hope would be, hopefully some of these can. I'm not sure about the Netflix one. Maybe I'll have to try to roll that again, but I think some of these other positions I should be able to close out of with a profit, hopefully, and bring the value back up. By the way, in Wednesday-ish, I should have a monthly, Wednesday or Thursday, because sometimes the data is lagged a little bit. But Wednesday or Thursday of this week, I should have my total earnings update for all my sources of income uploaded. But I don't have all the data until after, I think the end of the month is on Tuesday or something. So Wednesday or Thursday, I should be able to make that video and give you a picture of the progress I'm making. So don't forget to subscribe. Also, if you guys have any questions about options or anything I'm doing, let me know down below in the comments. Reach out to me on Instagram. Just trying to talk really fast and see if anybody can pay attention. Appreciate you guys. Peace.